Unlike Ethereum, it'd be nice if you could do all of this without having to learn a textbook of sort of like jargon. Like I'm
Yeah.
speaking right now, more Bitcoin can't be printed outside of mining, right? And that's what's beautiful about it. We're talking about US GDP will be Bitcoin GDP.
All right. On Coinage with us today, the CEO at Thesis, Matt Luongo. Matt, thanks so much for joining us, man.
Hey, Zach, thanks for having me.
Yeah, excited to chat with you right now because I think what you guys are building is hitting a very important stride in the way that you are enabling Bitcoin holders to earn yield on their BTC with what you're working on at Mezo and Acre. I just want to kick it off, man, with kind of the progress you've been making and now how easy it is for people to turn to you guys to do exactly that. How's the progress been?
Oh, well, it's killer. There's been this built up demand for years for people to, earn yield on Bitcoin, for people to get access to their equity on Bitcoin, be able to do things like take out mortgages. And I mean, I've noticed there because I have bought a house and wanted to get a mortgage. And I know that I want to make my Bitcoin an active investment, right? But I think what's really been different this year um, is what Ordinals did for Bitcoin last year kind of kicked the door open. Now people are actually, it's cool to build on Bitcoin again. And yeah, so no, it's going incredibly well. We're getting ready actually to announce Acre properly um, later this month. And if you are interested in just getting low level, low risk yield on your Bitcoin, we are your one stop shop. And later this year, I'm excited to expand that with Mesa.
Yeah, you said low risk ways to earn yield. And obviously, for anyone who suffered, as I did, through the explosion of BlockFi, Celsius, and all these other centralized lenders in the Three Arrows capital collapse, those people might be hesitant to dip a toe back into Bitcoin yield.
Rightfully.
But I suppose it's important to contrast what you guys are offering with centralized custody and what happened with those. So, how do you
Sure.
distinguish to people who might be a little shy to try out all of that
Yeah.
again, kind of how Mezo is different and what you guys are building?
Of course, yeah. So the most important thing for people to ask themselves with a project like this is like, where does the yield come from? Um, and so there's like a long discussion and a short discussion. But rather than having to trust me or a talking head or something on where yield comes from, the difference with something like Acre is that you can actually see. You can see where your Bitcoin's going. It's all obvious on chain. There aren't little side pockets. And I think, when you look back at BlockFi and Celsius, the ideas of these companies weren't wrong. The problem is we took our beautiful decentralized money and went back to the centralized systems that we've been trying to escape, right? So it was risk management. And so what I love about building something like this on chain is that people can actually decide what is their risk, are they comfortable with what's happening with their money, and then if they're not, then don't get involved.
Yeah, it might be one of those questions that is both important to ask and then maybe one that's uncouth. But obviously, if you're doing everything properly, asking where the yield comes from is totally fine. And in
Right.
the way that you guys kind of describe it on the blog, it is interesting and different, I suppose, right? In terms of what we've seen
Yeah.
happen on Ethereum and now what you guys and others are trying to build in the Bitcoin sphere. Um, Getting into the nitty gritty though, staked Bitcoin, all of this stuff it seems new to even Bitcoiners, to be honest. I mean, it
Yeah.
is kind of new. So how do you explain it to them and kind of where some of this is being unlocked?
Yeah. So you have to ask yourself, like, where is there, like, what can your Bitcoin do that helps someone else that's worth them paying for, but that doesn't really threaten your holdings? And that's kind of a hard question, right? Because to get reward, you're going to need to take some sort of risk. It's probably not zero. Um, and I think that was largely obfuscated. If you see, with things like Celsius and BlockFi, that was where it was like, okay, well, getting a reward, and I have no idea what the risk is. And then we all kind of found out the hard way. So if you look at Bitcoin yield today versus in the past, there are a few answers. So some are obvious. You can lend out your Bitcoin. People will borrow it. They will short against it. Um, that can be rehypothecated in a centralized model, which no one is a big fan of. But you also have models like if you look at something like Aave, where people are are just interested in using Bitcoin as collateral for other things. So you have this kind of like lending idea. You have swapping fees, right? So you can imagine putting your Bitcoin into something that looks like Uniswap or like another DEX, and then you're earning fees as an LP. So you're earning fees market making. Um, and then the last one you have, and this is all using kind of like traditional finance with DeFi words, but the last one is derivatives. So what can you do with options and futures and kind of more complex products? So those are kind of like the financy ways. But then you have
Mm-hmm.
to look at like, okay, what's native to the space? So for Ethereum, the answer is the Ethereum network prints more Ether for people to stake their Ether and secure the network. Um, so that's quite pristine. Some people might argue it's circular. There's all sorts of things to argue about proof of stake and the Ethereum network's ability to print Ether. More Bitcoin can't be printed outside of mining, right? And that's what's beautiful about it. But the thing about Bitcoin is there's a lot more Bitcoin than there is ETH. There's a lot more Bitcoin than there is of most other assets in our space. And it is actually quite useful to say, well, if it's great collateral, how can you protect other systems using it? So in the case of Mezo, for example, a third of the network security comes from Bitcoin holders,
Mm-hmm.
and the network actually pays for that, both in fees, in gas fees that are in Bitcoin, and in emissions from the network. So you now have the gas fees I would probably call honest yield, right? You have Bitcoin that has been earned on Bitcoin. It all stays in BTC. There's not another token that you have to consider selling or not. And then emissions, where you do have all those things. Um, Other models you can look at are models like Babylon, where instead of securing like one chain, they're like, okay, can we find a way for people's Bitcoin to secure multiple chains? And the closest equivalent to that, I think, in Ethereum is eigenlayer. Though
Mm-hmm.
it's kind of a flawed analogy, right? So yeah, I mean that's the idea is like people who want to build new systems need to be confident that the system is run accurately, and to do that, that means people need to have skin in the game. And I think that's where this like next revolution of Bitcoin yield is coming from. It's not just recycling TradFi ideas, but it's also using Bitcoin's strength as hard money to secure new networks.
Yeah, and as you said, obviously the black box kind of counterparty risk that no one really had any insight into in the Celsiuses and the BlockFi's of the world, a bit different here if you can track some of this on chain. But you
Yeah,
mentioned Babylon. We also had Munib from Stacks on not too long ago, and kind of his thoughts around how big this opportunity is if it can match, I think, some of the DeFi size on Ethereum. I'm
sure.
curious to get your take on that too, in terms of how huge this opportunity is. Obviously, as we're seeing the Bitcoin general space grow, and as you
Sure.
said, the amount of holders who now have Bitcoin who are looking to do things with it, kind of
Yep.
how you size the prize here as Mezo and Acre
I
now
mean,
start to hit their stride.
I think, yeah. I think that, what's interesting is Acre is probably the one that is more difficult to build and that's more difficult to understand how to value the opportunity, right? Because, because you can say, okay, is the closest equivalent Lido? Is the closest equivalent Eigenlayer? Um, is the closest Yearn. It's somewhere in between those things. Um, where what Acre's focused on is making it just easy. You shouldn't have to, unlike Ethereum, it'd be nice if you could do all of this without having to learn a textbook of sort of like jargon, like I'm
Yeah.
speaking right now, and so that's really Acres approach is to make these things easy. So sizing that, I think, in a lot of ways, I think that it's quite possible that yield generation on Bitcoin might be the biggest of all of these opportunities because we don't yet have product market fit for an L2 on Bitcoin. Or for we try to avoid the term L2, but even for a sidechain on Bitcoin, we are starting to have product market fit for it on Ethereum, and but we know from failures in the past that people want yield on their Bitcoin. So I think I would actually say that the yield opportunity is bigger.
Hmm.
Eventually, or at least more obviously bigger. Eventually, though, I think the opportunity for new layers on Bitcoin. I mean, our mission at Mezo is to see 25% of the world's economic activity on Bitcoin. So eventually, like obviously, that is the largest market you could go after is facilitating the entire world economy. And
Yeah.
that's what these new layers on Bitcoin do.
Yeah, I mean it's a cool way to word it too. I think in terms of building a Bitcoin economic layer, as we've been talking about in looking at what you guys are doing at Mezo, and I'm curious to kind of get your sense, Matt, in terms of how you track progress, right? Because there's so many different things to look at. I
Yeah,
guess one that people are accustomed to looking at is total value locked, and it's obviously always
sure.
different. There's apples and oranges comparisons here. I don't even know if these
Yeah.
numbers are technically right from DeFi Llama, but I'm looking at it right now in terms of Mezo now crossing
Oh, they're
over
close.
100 million in total value locked. I mean, what do you look at
Yeah.
as kind of keeping pace to make sure you're delivering on the roadmap that you want to?
Yeah, sure. So, I mean, there's a few pieces here. Like TVL is it a flawed metric? Absolutely. We can all think of how it's gamed. What I like about TVL for a project like this, though, is that's Bitcoin. So that's not a token someone's printed. That's not like a shell game. You can see on chain that that's Bitcoin. And then the other thing that we've done is um, over 80% of all of our TVL is locked for 9 months plus. And the reason that's important to me, short of the chain being live, is that there's this religion might be too strong, but there's this like strong belief by people that hold Bitcoin that it's almost virtuous to hold it for a long time. So there's like, hey, I think the price will go up, but it's also the longer I hold my Bitcoin, the more sort of like work that I'm doing to opt out of the traditional finance system. And this idea has existed. I mean, as long as the term HODL has existed, right? It's an old idea, and so that's how I'm looking at this. Is like I care more about conviction than I care about size. Um, but after that, as we go live later this year, more and more of our progress is going to be, have we enabled a circular economy atop Bitcoin? Um, this is something that we have been, at least I have been talking about with friends in the space since 2014. And I think we all envisioned that Bitcoin would just get used like USD. You know, a decade ago,
Yeah.
that was what we thought was going to happen. What we've actually seen is that people have used Bitcoin to buy and sell ordinals, to buy and sell BRC20s and runes, and that they're interested in getting USD against it. But ultimately, right, they want to spend their USD, they want to spend their dirty fiat, and they want to keep their Bitcoin. And so that's how you're going to see kind of like my thoughts shift is like TVL is kind of a proxy metric, but what you really want is um, economic activity that you've unlocked. And of course, to make sure it's not a wash, you want to make sure that you're looking at like the revenue going to a particular ecosystem rather than just like did someone send $10 back and forth a million times or something like that.
Yeah, I mean, you mentioned there's so many different ways to game some of these metrics, but as your blog kind of pointed out here, generally the reading is that people want to hold on to their Bitcoin,
Yeah, yeah,
and that would be maybe a retail. I don't know. It could be a retail play. It could not be. But I mean, when you kind of think about who this is built for, by abstracting away those things, I assume this is very much targeted towards retail. Who doesn't want to,
of
as you
course.
said, use a dictionary to get involved in all this and make it as easy as
Yeah,
possible? Proof of HODL, I think, even throwing that out would be kind of something
yeah.
that sounds attuned to retail. I mean, is that a way that you distinguish from all the other yields
Oh
generating
yeah.
opportunities?
Oh, for sure. I mean, like we're trying to cover like both sides of this opportunity. So we want to give the yield opportunity to Bitcoin holders, and then we actually want to make sure. I mean, this is just me scratching an itch. I get to reuse this every few years. The like Matt bought a house story, but I tried back in 2020 um, and I told my lender, hey, I have Bitcoin, and so I would love some USD so that I can buy this house. But also I have Bitcoin, so like you would think that I'm like more credit worthy, right? And my lender told me, I know exactly what to do. Sell your Bitcoin and come back in 31 days, and we'll pretend like this conversation never happened. And right, which is pretty rough. And so I'm in the process of we're moving down the street right now, and so I got to see what's changed over the last 4 years. And so I thought to myself, okay, I want a low interest USD loan against my Bitcoin because I plan on holding this loan for a long time so I can buy a house, but I don't want to sell. And ideally, it would all be self-custodial, right? And so as I did this, cool thing from 4 years ago is, hey, the tools are actually there now. I had some TBTC. I took a Curve USD loan against that TBTC. I used that to put the offer on the house. We're under contract. We should close in a week, fingers crossed. But the rates are intense because everyone else who wants a loan against their BTC right now, they're doing it so that they can get levered long or so they can take some position. And I just want a house. I want I want like a reasonable rate that I can just sort of let it sit in one place. So a lot of what we're doing, specifically on Mezo, is to make sure that we can kind of balance. Okay, stablecoins want a good return, but also we want people to be able to trust their actual financial lives. We don't just want traders who are okay with like a 30% APR because they're looking to like 100x something.
Mm-hmm.
We want people who are actually like building their lives on the Bitcoin network. So that's really the focus on Mezo, and then on Acre, it's really just about how can you take those yield opportunities and flip it around and make sure that Bitcoin holders who maybe don't need a mortgage are the ones who are making money there.
Yeah. I mean, obviously, you've been in the space for a really long time, as you said. I think maybe some of that opportunity here now to focus on retail speaks to, A, how far the space has come and how large the retail side maybe has grown, at least in terms of people who are hodling. There are other projects, though. You mentioned kind of 30% APY. We just had a guy on from the decentralized stablecoin synthetic dollar project, Athena. And also, there's so much chat now about other people copying the so-called Widowmaker trade right now to basically put their money in Bitcoin ETFs and then short. Are there things like that that make you nervous? Because there are, of course, ways to maybe redo what BlockFi and all these others did, even though it's quote-unquote decentralized. I mean, how do you look at the market?
So I'm a fan of Athena. I hope that I don't regret that later because I started as an engineer, and so for me to get comfortable with the finance component, I have to have built it in 3 projects before I feel confident telling people about it. So I don't understand Athena so well that I would recommend that someone YOLO in with a significant amount of money. However, it's really cool. I'm quite interested. That said, I think my biggest worry I have 2. One is that everything that we're doing right now to extend Bitcoin, it only takes one really bad fall from potentially a malicious player even to poison a whole space. So, for example, TBTC, which is a decentralized Bitcoin bridge that we've worked on for years, has been going strong since 2020. It's bridged over $500 million. It hasn't had any issues since launch, and I'm quite pleased with it. It's just like, how can someone's built a bridge that hasn't gotten hacked? It's been 4.5 years. Like, that's pretty uncommon. So I'm happy with all of that stuff. But we had a competitor, RenBTC, and RenBTC grew a lot faster, and they played fast and loose. And then it turns out that shortly, well, I don't want to spoil the story. They ended up the dev team ended up selling to Alameda, and then when Alameda went under, RenBTC, like the assets in the bridge, actually got caught in bankruptcy. So you have to ask yourself, in what world was that bridge acceptable? That those assets, because it turns out all the decentralization stuff we heard about was theater. So in what world is it okay that happened? But it doesn't matter that we had a better solution, because now it kind of set back how people looked at Bitcoin bridges for years. We saw something similar happen with the FTX-backed Sol BTC on Solana, where BTC on Solana has not recovered since the FTX and Alameda downfall. So it only takes one bad apple to really make an entire category dangerous, and for people to be very concerned about it, even if there's no connection and it doesn't make sense. So I think my first biggest worry is for me, and not for the whole space, is I don't want someone that pops up and that's a fly-by-night operation, and maybe they rug or maybe they just have a huge hack, end up kind of spoiling everything for everyone. The second concern is more for the whole space, which is, we're about to see all of Ethereum played back on Bitcoin. And yeah, like history won't repeat; it'll rhyme. It'll be a little bit different. But a lot of people who hold Bitcoin do not have the immune system that Solana and Ethereum people have been building up over the past few years. They don't have the nose for whether something's too good to be true.
Mm-hmm.
When you just say for years, every project that's not Bitcoin is a scam, well, you're right 95% of the time. So actually, that's a decent heuristic, right?
Yeah.
But you don't really learn when to say this is a good project. And so I think that I think that there's going to be a huge education component as more and more Bitcoin becomes active, to make sure that people are safe and to make sure that we don't repeat all the lessons we've learned in these other ecosystems.
Yeah, and I mean, credit to Guy for answering the questions we asked, and he answered on the show when he came on. I think transparency and again being upfront with the risks is a lesson that a lot of people learned in that world.
Yeah.
And you mentioned kind of some of the Bitcoin maxi thinking. I know I've seen you say that Ethereum was a test net, and now, as you say, we're going to run back history on Bitcoin. I wonder too. Seems like these ETH ETFs are going to be coming pretty soon. And
Sure.
obviously, we saw a huge pump in activity in terms of the Bitcoin ETFs beginning their trading. Now, as Ethereum kind of begins to trade in their ETFs, I'm kind of curious what you expect to have happen, kind of given around the lead, the moat, if you want to call it that Bitcoin had.
I mean,
how do you see it changing
yeah.
things in the back half of the year?
I've never thought that I don't think that the Bitcoin ETF is a moat, right? I mean, obviously we're about to see that if it was, it's going to be bridged. The moat that I think Bitcoin has is that when I go to invite, actually, I don't invite people into, I don't invite family into the space because I think it's a great way to ruin Thanksgiving. So let me say that differently. When a family member comes to me and they say they want to get involved, inevitably, right, they'll show up on CoinMarketCap or CoinGecko, and they'll say so what should I buy? Which is obviously, again, very dangerous. Maybe avoid this conversation with your family. But when you start going down the list with Bitcoin, you have this really clear answer. You're like, okay, so Bitcoin is it's digital money, and it's a way to hedge against institutional failure. It's a way to hedge against money printing, and it's a very clear story. And then when you get to Ethereum, you're like, it's a world computer that is sort of like a decentralized stock market, but also there are L2s and you can use it to, it's quite convoluted. And this isn't really necessarily a criticism to the CEO of Ethereum. And by the way, if you're Bitcoin Maxi, that's a joke. There isn't a CEO of Ethereum. But it's quite difficult to explain to people. But then when you move beyond those two, outside of stablecoins, it's a complete mess, right? The top 100, it's so this is dog money. Okay, that's actually fairly straightforward. But what about this project? Is it a scam? Is it not a scam? And it's so nuanced and complicated. And you realize that we aren't ready for that top of funnel to explode out, right? And so the only answer that I've got is, well, buy Bitcoin if you're okay with waiting 5-10 years.
Mm-hmm.
But if you're day trading, I don't think you should buy any of this unless you know a hell of a lot more than you do. So for me, that consistency of narrative and the fact that most Bitcoin holders can kind of spit back a pitch to you about what Bitcoin is for, I think that's the moat that Bitcoin has over Ethereum. I'm quite excited for the ETH ETF because I think that regulators being the ones to choose the winners in our space is antithetical to kind of the whole reason I'm here. So I welcome the ETH ETF. I expect that it'll be good for Bitcoin as well. And I think that as someone who's working on this sort of Bitcoin layers and these extension for Bitcoin, I'm also just excited because I think that we have a chance to explain very concretely what something that looks like Ethereum should do and what retail should want to do. So instead of Ethereum is everything to everyone, we can say, well, Mezo helps you get mortgages against your Bitcoin, which means there's another spot where you can cut banks out of your life. right?
I do think that's
Um,
interesting, though. I
yeah,
think that's interesting because you mentioned kind of how antithetical some of this stuff might be. Well,
yeah,
speaking of the Bitcoin ETFs, I wonder if any of that to you maybe seems antithetical as we see BlackRock and Fidelity now control such a wide swath of Bitcoin, or
yeah,
MicroStrategy stepping in now as a company holding so
sure,
much of it too. If people start to say, wait a minute, a lot of this is in centralized points. I
yeah.
don't know how antithetical that is. And maybe, again, maybe it speaks
It
to
is.
why
No,
you're
it
so
is. It
importantly
is.
building what you're building
It
now.
is. Look, I think people have heard my rancor about the ETFs, and so let me pull it back a little bit. I love what the ETFs are doing for access to the asset.
Yeah.
Um, I love that they're bringing awareness to the space. So like that's very cool. What I worry about with the ETFs, like, is basically like how do you go from being an ETF holder to being like a self sovereign individual? So how do you go from I bought a thing in the database with cash that's cash settled to actually like owning your own finances, kind of owning your own destiny, and um, and so I think that the challenge for builders like us, one is that we just need to hurry up, right? Because as the ETFs become more and more entrenched, there's less and less reason to go down the funnel to self
Yeah.
custody. And then I think the other challenge is just going to be just like finding a way to take people. It's like, cool, now you bought an ETF. How do we get you to then put Bitcoin on a ledger? And then how do we get you to, then how do we get you to go, further and further? So I think from a product and experience perspective, I think that that's really important. From a governance perspective, eventually these ETFs propose governance risks. In the same way that like USDT atop Ethereum proposes it is a governance risk to an Ethereum fork. Eventually, I would expect that the economic weight of these ETFs can actually impact how Bitcoin is governed. But I have to say that Bitcoin is in a far better spot to withstand that scrutiny than something like Ethereum. Because with
Hmm.
Bitcoin, when I say there could be governance issues, you're like, well, with whom? Who, and it's not clear because Bitcoin can just like ossify and stop moving. And
Yeah.
that's what happens under duress. It just stops. Like the network keeps going, but like it stops changing. And when you look at something like Ethereum, the sort of like development governance is everything is a lot more active. There's a roadmap. You have the EF doing one thing, and you have client developers doing another, but they're roughly in lockstep. So you can kind of like point out the parties who might be able to propose changes credibly.
Hmm.
And I think that so in a lot of ways, I think that that's a bigger danger to Ethereum than to something like Bitcoin.
Yeah, well, we're talking pretty big picture, and I suppose that's a good way to kind of tie everything together, wrap it up, and look ahead. Because whenever we have smart people such as yourself on the show, Matt, we like to ask about big bold claims, which is we're
Sure.
about halfway through the year, looking forward to even the rest of 2024 into next year. What Matt Luongo's big bold claims are when it comes to crypto, in what people should look forward to, maybe keep an eye on. What are your big
Okay.
bold claims?
Yeah, let's see. Big bold claims. Oh God, everything I'm thinking about is 10-year. Well, let me do 10-year first, and then
Okay,
I'll get back to 1 year.
sure.
Um, 10-year, we're going to see the Bitcoin nation state be as large as the United States.
Be as large as the
So,
United States?
yep, we're talking about U.S. GDP will be Bitcoin GDP. Not only is that what we're trying to accomplish at Meza, but I think that's what the whole space is trying to accomplish, and I don't think it's going to take as long as we all are imagining. Um,
Hmm.
shorter than that, though, things that I fully expect. Shocker, I think that there's about to be sort of like Bitcoin season 2, round 2. I don't know if it's even going to wait for next year, though, so maybe that's not a very bold claim. I think that we're going to see. I feel like we're finally ready for a non-crypto breakout app. Um, we've seen like in the space apps go viral, uh, but the last time I can see something that actually kind of converted people, I'm thinking like Change Tip in 2015 or something. Like
Yeah.
I think we're actually ready to kind of like transcend, just saying Bitcoin all the time or saying crypto all the time. So I expect we see at least one 200,000 DAU not crypto user app which like that might sound like a small claim because like 200,000 is not huge, but I think the not
But
crypto
by our
user
standards,
part
by crypto,
yes.
it's actually quite bold.
Yeah.
I
So
mean,
I
it's
think
not
we're
as
going to
bold as
see
the
that.
first one. I'm looking at US GDP right now, and I'm still kind of unsettled about that claim because it's like 25 trillion. I'm like, where's this going to come from? Is the estimation there
Right.
that it's mostly like, it's not just El Salvador, it's not just Argentina, it's like other countries
I think it's
adopting it, or it's
everyone.
more
I
builders
think
on
it's
top?
everyone.
Okay.
I think so. I think it's both, right? So I think the cataclysmic version is probably not good for the U.S. So like I don't want to be a doomer about my own country of residence or anything, but I think there's the cataclysmic version, which is like USD losing its reserve status. But I think the positive version is we just see more and more of the economy move over to rails that are less easy to tamper with, and I think that as people, as U.S. dollars used to deplatform countries, there's just this strong incentive to move to something that's more fair, and yeah, so that's where I think it happens. So don't get me wrong, I'm not saying the Bitcoin price will be U.S. GDP divided by 21 million or anything, but I think that but I think that economy, that size of economy, can be happening on top of Bitcoin, and when you start to be like, okay, well, let's move mortgages over, all of them. Let's move all of our stock markets over. It starts to like actually the numbers are not as crazy when you start like going sector by sector, but yeah, it's pretty bold.
It is a bold claim. It might be our boldest yet. But then again, 10 years out, long time to still go, and long time to maybe let everyone build for a little bit longer. But Matt Luongo, the CEO at Thesis, building out Mezo and Acre. Can't thank you enough for coming on, man. That's a good way to wrap up right there. Gives a lot of people a lot of time to think about these things. Thank you so much for coming on, man, and congrats again on everything you built.
Thanks a lot, Zach.